What's going on, everyone? Shalon Winter here, and I finally have the updated spreadsheets ready. And I say finally because most of you have seen I keep posting for the last couple weeks that it's going to be ready. It's going to be ready. I'm working on it. Oh, it's ready. The video should come out. Well, what happened too a bunch of times was I fixed up the spreadsheet, added the new features, went through it, and literally as I was recording the videos and I was going through some explanations and details, I would find a little something wrong with it, right? And and so then I'd kind of like pause the video and say, okay, well, I can just pause this. I can edit it. Let me figure this out real quick. But every single time, it wasn't a simple little fix. And the next thing you know, an hour passed for me to finally fix one little piece that was broken in the spreadsheet or whatever. And then I'm like, all right, this video here, I don't even remember what I was saying when I paused the video. Let me just finish it and I'll make the video the next day. Then the next day, started doing it again and found another error. I'm like, oh my goodness. So anyways, if you're brand new, because my channel has actually been getting quite a bit of subscribers, new subscribers. So if you are new, again, thank you for being a subscriber and watching this video. And if you haven't, or if this is your first time seeing this spreadsheet, I made the original Google Sheet months back, and it's actually been a pretty big hit. And a lot of people's been using it. A lot of people love it. And really what this is built for, just in case if you're just now coming in here and you're seeing this, the reason why I built this spreadsheet was because at the time I couldn't really find a journal that I liked exactly how I wanted it. That was online. I mean, there's some good journals online, and as you know, I do promote TradeZella a lot. I love TradeZella, but a couple of things, right? So for one, journals are not necessarily online journals the cheapest. They range from $20 to $50 a month usually. And not everybody wants that. So, journaling on your piece of paper is just fine. But then again, are you going to really get as much value out of it? So most of us trade prop firms. Very few people I know anymore trade just their own live account. So I built this to tailor, and I trade Apex accounts. Most of you know that. And I built this because I have 20 Apex accounts. When I built it, I didn't have 20, but I knew I was going to eventually get 20. And I wanted something simple because if you have an online journal and it's not automatically synced, where you can sync some if you have Tradeovate accounts, but, there's limitations still. So I built this that way I can tailor it to exactly how I wanted, and I did not want to spend the time uploading or downloading CSV files and doing all that. Like that tedious work was like, I hated doing that all the time. If it was just one account, okay, maybe not so bad. But when you start getting, 6, 7, 8, 10, 20 accounts, or maybe even more if you have multiple prop firms, I mean, it can get like tedious, very tedious. Now, there are some prop firms that have their own journals and stuff and like that online, which is good. But as I take you through this, there's some features and things that I don't know of really any journals, online journals that has everything together like this. And just so you know, this spreadsheet, I offer it completely free. There's no gimmick, no gotcha, nothing like that. Yes, I spent a lot of time building this, and it's progressed. That's why I have an update, some new features, and also an Excel version, because originally it was only a Google Sheet, and I put it out there because I was using it, and I'd post screenshots, and people would say, hey, what is that? Can I have that? So I started giving it out, and then as time went on, I added things, kind of made some adjustments, found a few things wrong with the original one. So I was like, yeah, we need an Excel version. We need a Google Sheet version. We need these updates. So here we are. So all I ask is in the description, you'll see a link to get this journal. It's a link. It'll pop open a page. You'll just put in your email. And then once you put in your email, you'll instantly get an email with both the Excel download or the Google Sheet link where you can go and make your own copy. And basically it'll have all the instructions there of how to do it. And if you need to rewatch this video, you can. So this video is also going to be a 2-part, because I know there's some people that don't know how to use this sheet and have never seen this sheet. And there's people that have the original Google Sheet and they just want the updated one, right? So the first part of this video, I'm going to show you really quick the new features and what they do. Okay. And then the second part, I'm going to go back over how to use this sheet for those of you that don't know. That way you don't have to go back and find that other video. If you want to watch the other video, that's great. But if not, you can just stick around for this one. All right. So let's jump right in here and go over it. So basically, let's go full screen here real quick on this Excel. This is the Excel version. Now, the Google Sheet version is exactly the same. Okay. So it doesn't look exactly like the original that I made before. It's going to look like the updated version. Okay. And this is the Google Sheet version. Like I said, it's exactly the same as the Excel. So I'm going to be operating on the Excel one here for today's video. Now, everything on this sheet, the entire sheet, all the tabs everywhere, everything that you shouldn't mess with is locked. So like I literally can't click anything on this sheet. Don't worry, it's not locked, so you can't make adjustments. I don't care if you make adjustments. It's your sheet. It's not, it's whatever. It's for you, right? So all you have to do is, and the reason why I locked is so you don't click and accidentally mess up any formulas, okay, or anything. But if you want to change colors, you want to adjust this or build on it, by all means, go ahead. I don't care. All you do is just right click. It's not password protected. So you just right click the tab down here and then you just click unprotect sheet. And that's literally it. It unlocks everything. There's no password, no nothing. All right. So just want to put that out there, and you can do whatever you want with this sheet. So this first overview sheet, you should not need to click anything. Everything up on this sheet is auto-populated. Okay. So we have the new feature is going to be this contract sizer. I'm not going to explain it just right this second. I'll get back to this in a minute because it's going to make more sense once I have some values in here and then you can see it actually work. But this is really neat though. I liked it because this is based on how I like to do my money management plan. Okay. Not everybody's going to do it the same way, but you can still tailor it to how you want to do your money management plan with this. And like I said, it'll make more sense when I go into it. But basically, this is going to tell you how many contracts to trade each day based on the risk that you are allowing yourself to risk for that day. And that is what I believe a good trader, a great trader, and a consistent one, a profitable one, that's what I believe the focus should be, is managing your risk, right? How much are you going to risk per day? You got to have a number and you can't go over that risk, right? So you got to have a buffer. You can't risk 50% of your account every day. Now, if you're one of these guys that just blow and go prop firm accounts and don't care if you blow them, you're looking at your overall P&L, hey, that's fine. That's your choice. But, if you're looking to trade as if you were trading a live account, which I do copy my own personal live account with my funded accounts, so I have to trade that way. That's why I do it this way. So you'll be able to see how much to risk per day based on these parameters. And I'll go into that, like I said, here in a little bit. So back to the overview sheet. These two columns here, let me get my pen here because you can't edit this. All right. This uncapped column and this available for payout. Those both are brand new. Everything else on this sheet is what is existing. Okay, that's all there. But what I did here is on the data sheet, you'll be able to enter in any parameter that'll, because most prop firms, a lot of prop firms, in the beginning you're capped. So like, you can only withdraw, say, $2,000 per payout, whatever that is, whatever prop firm you use it. And that's the max until you reach X amount of payouts. Then you're uncapped and you could take out $5,000, $10,000, whatever you want, right? So you can adjust that, but that's why I have that. That way My accounts are going to be over here listed. And then I can see, okay, this account number 1, okay, is it uncapped? Well, no, it's still capped. But is it uncapped? Yes. Okay, I know I can take more for payout. Now, this column here, again, you'll set your parameters, but you'll put in here, this will tell you based on how much money you're made and all that, what your available is for payout per account. And then it'll total it down here. Your total available for payout. That way, you have a centralized area where you can just have your information here and look quickly and see, do I have anything available for payout? Yes. What's that total? Okay. Do I want to withdraw? Do I not? Etc. So, and also, if you're new and haven't seen this spreadsheet or my old video, I do want to note another purpose of me doing this, like I said, was I didn't want to spend a lot of time uploading stuff, right? So this sheet, it's very fast to get your information in this sheet. And if you have a Rhythmic accounts, it's literally less than a minute. You can have all your information here just by a simple copy paste from Rhythmic. Okay. Now, the reason why I did Rhythmic, again, because I've had my accounts forever, for over a year without blowing them. And basically, I created this because I've always had Rhythmic accounts. That's just the short version of it. Okay. And, you can use any accounts, Tradeovate, whatever it is, but you'll have to manually put it in, just the numbers. You'll see that here in a second. So you can still do it in like 5 minutes or less, but it's not just a simple copy paste. That's the only difference. All right. So that's the only updates here on this overview page. The other updates are gonna, besides this contract sizer down here, is gonna come on each month page we have here. Okay. So I gotta be aware of where I am on the screen so I don't block anything. All right. So this looks pretty similar, pretty much the same. All right. But here's a couple new features here. Okay. If you didn't notice, on the original Google Sheet, the calendar over here was messed up because I put it together pretty quick and I didn't realize. So on the other sheet, basically you enter in the first day and it wasn't really a dynamic calendar. And what I mean by that is it would just have like week 1, 2, 3, 4, 5, whatever. And then just, Monday, Tuesday, Wednesday. It didn't actually mimic the actual calendar for the year. So the weeks could be messed up. So your week 1 or week 2 might actually all have been week 1, for example. So that wasn't dynamic. Now it is dynamic. So literally all you do, and like I said, you can't mess this up. You can't click where you're not supposed to. Right here where it says insert date, you just insert the date there that you're starting. And I recommend you insert the 1st. So just the 1st of whatever month, January 1st, February 1st, whatever. And also on the old one over here on the left, right here, the date column, you used to have to put in, if I traded that day, I'd have to put in the date and then put in the rest of the information. Now that's also auto-populated right here. So as soon as you enter the 1st or whatever day, let's go to February here. Okay. Hit enter. It changes the dates, all the dates. And then, like I said, over here on this side, it's dynamic. So it changes. If you pull up a calendar right now, February 1st of 2025 started on a Saturday. So it's all correct, right? So like whatever month you do, it's going to be dynamic. So that's great. It's very good. And on the bottom here, just real quick, it's labeled month 1, 2, 3, 4, 5, 6, and not by the actual January, February, March, April. For the reason, because let's say you're starting this sheet brand new today, August 5th. Okay. You can go and just find August 5th, but the way the spreadsheet's built, you have to start on month 1. That way everything calculates. All the cumulative profits calculates correctly. Okay. So you'll always start on month 1, but then all you would do is just go here, hit the 8 because you're starting in August. Okay. And then this will be August 25th. It'll put that, and that will be your month 1. And you just go until the end of the year, and then you'll just start a new sheet. And I'll show you how to carry that over to a new sheet later. but it's on that one. That is on my original video. So again, I'm just want to go over the new features for now, right quick. Okay. So that's a new feature, the fix of the calendar. I've had a few people complain about that. No big deal though. All right. And then here's another one, trade grade. That one, I love this one. Not everybody does, because not everybody likes to be real with themselves, but I love this one. Why? Because every time I take a trade, let's say I took a trade here, I put in the market NQ, for example, I say I won that day, put in my P&L, let's say I made $500. Okay, great. Put in my screenshot. I always put a link of my screenshot, put in my trade notes, blah, blah, blah. Then I go to my trade grade. I always did that. And normally right here in the trade notes, I would put in, today was a good day, blah, 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 whatever. And I'd say I'd give myself an A+ on this, or an A trade grade. Like, I give myself an A for today. Good. Or, this, whatever. I broke my disc, whatever. I give myself a C. Wasn't too bad, but it wasn't that good. Okay, give myself a C. So that's all fine. But if you never go back, if it's never in your face, if you never review it, you're never going to remember it, right? It's just going to be like the cliche saying, right? The definition of insanity is doing the same thing over and over, expecting different results. Now, if you do the same thing over and over and you're just going through the motions, entering in your information in a sheet or even online journal, whatever, but you're never going back and reviewing, you're not improving. Plain and simple. If you want to be a great, consistent trader, if you want to make money, if you want to make a living at this, you got to act in a professional manner. It can't be just a hobby. And you can't ignore things when you got to go back and review. Okay? So if you throw in a grade here, I got an A for that day. Boom. I love that. You put in the grade for the day, and also right here, your average trade grade. This right here to be honest, was a pain in the butt to figure out how to make it do that, because I'm not a spreadsheet guru. But I love this average trade grade. You need to set basically goals for, these are the type of goals I like for trading, right? I don't necessarily set, I got to make, $2,000 is my goal. I need certain goals are hard to set. Like, it's good to have them, but sometimes there's goals that are just plain and simple out of your control, because trading is a probabilities, right, game, right? It's all about probabilities and money management, risking your money management, your risk management, right? So if that's the case, have goals for what you can control. I can control if my trade, my day is an A+, is an A. I can control that because I'm clicking the buttons. However, the result, if it loses, that doesn't mean anything. If I lost, I can still have an A for the day. But the average, so you got to set a goal. So like, let's say I set like my average trade grade needs to be an A for the month. So what that tells me is, okay, I'm having A. Then this was a B. Okay. Then I have a bad day. I'm like, oh, I got a D. Well, you can see my average trade grade dropped to a B. So if you're looking at this every single day, especially before you trade, just pop it open and look. Look at your numbers. Not the profits, not the P&L, but look at your numbers up here, averages. That's why I look at averages. Average win-loss ratio, average trade grade, broken rules, which I'll go over that, profit factor, win rate. Look at those things, because now I can look and say, oh, yeah, that's right. I had a D right here last week, which brought my average trade grade down to a B. I got to bring that up. So now I know when I'm trading, like, all right, I can't just take any random or something that looks bad. Like, I got to know what I'm looking for, because I need to bump that trade grade back to an A. Look how many A's it takes to get back up there, right? So because it's a true average, okay. Now what can happen with this as well? I got a D. Oh, maybe I'm like, oh, what's wrong with me? Is it my strategy? What am I doing something wrong? Is the market bad? Then let's say you get an F. and then you get another F, and you're just having a bad time. Like you get a D, right? You're having a rough time. Let's say you didn't get an F. Now all of a sudden you drop down to a D grade, right? And you're like, all right, maybe it's time for me to take a step back. Maybe I need to size down to 1 micro. Maybe I need to like zoom out and figure this thing out. There's something obviously going on, right? If this trade grade gets down to a D, F, whatever parameter you set yourself, if it gets down there, have yourself a stopping point, because you got to stop the bleeding, right? I've been there. Y'all have seen, since I've been doing, a lot of YouTube and stuff, man, and actually right after my best month I had in March, April happened to be my worst month. And then May happened, and I'm like, I had 2 back-to-back bad months. I had to stop the bleeding. I had to step back and stop the bleeding and say, what is going on? I just had the best month of my life. And followed by the worst month and then a bad month. So like at that point, you got to step back and say, all right, what happened? What's the difference between this great month and this bad month? So this helps you as you're going through your month. So you don't have to wait until the month is over to look back and say, man, that was bad. Or, man, that was great. As you're going through, you're literally looking at your grade, right? I mean, it's like school. You're looking at your grade saying, oh, okay, I got to step back. But in this case, I've only had, say, 5 or 6 or 7 trading days. Stop the bleeding, okay? Then you get back on the right track. Let's bring it back, okay? So I love that. I don't know about y'all. Y'all know that I preach discipline, money management, and risk management, psychology. That's like what I love. And I don't care what nobody says. I love that. So that excites me, okay? And I hope it excites you too. And if it doesn't, I don't know what to say. Anyways, all right. So the next thing that I added was the broken rules column, okay? Because sometimes, like, we know we break rules, right? Same exact thing as trade grade. And then you're going to have your broken rules, your total up here, and then your rate. Okay, so keep an eye on those. We know we break rules sometimes, and it's the same thing. You can break a rule, you can note it, and you can be like, I broke a rule. I'm not going to break a rule tomorrow. I got to get good. Well, what happens if you break a rule on a Monday? You're good for the rest of the week. Then the next week, you break a rule on Thursday. Well, there's a lot of time that went by. And then the following week, you broke a rule twice. You're creating a habit that you don't even realize you're creating. And that habit is, now I'm breaking a rule 1 to 2 times a week. And I might not even realize it. But guess what will make you realize it? If you got to go in here and punch in that you broke a rule. Right? You will. You'll realize it. Okay, so let me highlight some days here traded, okay? So let's say we had some days, and even, so here's the thing with rule breaks, right? Even on winning days, you can break a rule. That's what I call fool's gold, okay? There's fool's gold. If I broke a rule, I hate it, right? I hate to break a rule, and I hate losing money from breaking a rule. I don't like it. But the worst thing that can happen when you break rules is that you make money off of it. Because then you're going to go online, or that's when you see people say, well, at least green is green. Green is green. Green is green. I hate that saying. I'm sorry. Like, I hate that saying. Well, green is green. Man, I hate it. That's like, I don't know. I was going to give you some analogy. Some basketball analogy, but I'm not going to go down that road. But anyways, I just hate it because it's fool's gold. It's like, you're getting rewarded for something bad. So it's never going to set in. That punishment is not going to set in. You're going to do it over and over, okay? But like I said, if you got to come in here and you broke rules and then you broke rules again, you see this broken rules rate, you need to also set a goal for yourself of a certain percentage you can't go over for the month of broken rules. Because then there's going to be a problem. Now you have a couple data points. Okay, well, I'm breaking a lot of rules, or I'm taking bad trades according to what I like to take, right? And you can kind of figure yourself out what's going on. Like if you have always A's, no rule breaks, but you're not winning a lot, well, that tells you, okay, maybe there's something going on with the market, or maybe I just need a better strategy. Maybe I really just need a better strategy. Maybe I have too tight of a stop loss. Maybe like there's things you could figure out at that point. But let's say instead you have all these bad trade grades and then you have bad rule breaks, a lot of rule breaks. Well, then you know it's nothing to do with anything but yourself. And so if you set a target here, I don't want to, we're human. We're going to break rules every now and then, right? So you can't be 100% all the time. But you want to set yourself a threshold of, I don't want to break rules more than 10% of the time of my trade. So it's calculating based on how many trades you're taking, right? So if I take not 100, but let's say I take 20 trades, you have a number. I don't want to break rules more than 10% of the time. So there is a place here on the data sheet where you can go and put in here your limit. Monthly rule break max threshold. If you want to make sure you don't go over 10%, 5%, whatever it is, you just put that number there. All that does is right here, highlight the cell when you've broken that, okay? I wish I could do that for Google Sheets. I couldn't put a highlight for that here. I would have to put it somewhere else, and I didn't. So it's not going to highlight it on the Google Sheet. That's the only difference between the two spreadsheets. It's not going to put that here. But this rules break, it'll highlight when it crosses that threshold. Here, let's add some more. See, there you go. So yeah, so I love that because it's another data point and you can be real with yourself. And the same thing, like, oh, man, I broke a lot of rules. Zoom out, step back. Let's figure this out, okay? Those are the biggest features, new features that I added. Okay, right there. You also have this big notes area up here, which before I just had the trade notes down here. And now you have a big note area where you could type in whatever you want. If it's for the whole month or if it's just a reminder of something every day to do, whatever it is, you can go ahead and add that in there. Let me add in a couple of data points here so you can see the little chart as well. So you have the chart, looks pretty good. You got your weeks down here, actually calculating correctly the weeks. And then back to the overview sheet. Oh, I need to input the data for it to calculate that. Well, you do have one data point here for month 1, but I need multiple months to show the entire. This is the equity curve for every single month. So, all right, so that was it for the new features. Okay, so if you already know how to use the spreadsheet and all that, you can stop here, hit the link, get you your copies, whether you want the Excel version, the Google Sheet version, or both. I don't care, completely up to you. And yeah, that's it from here. So from here, what I'm going to do for all of you newer people that are just joining, I'm going to go ahead and show you exactly how to use this. So give me another 20-ish minutes here, and I'll take you through how to use this from start to finish. So here we go. Let me go ahead and erase some of this stuff here so that way, or I'll just leave that there. All right. So what you're going to do is you're going to go to this data sheet because that's where you input all your stuff. Okay. It's kind of self-explanatory. Again, you can only edit what you're allowed to edit or what you should edit. So here is where you're going to put your account numbers, PA number if you're using Apex or whatever the account number name is, So we're just going to go 1, 2, 3. Let's see if I can pull this down. We're going to go series. Pull it down there. All right, so we're going to have 20 accounts, okay? And then balance. So, well, real quick, let me show you how to copy paste with Rhythmic first, and then we'll get back to manual entry. So, one second. Let me pull this up. Okay, so here is Rhythmic pulled up here. Okay, some of this info is blurred out because I don't want the information out there. But what I would recommend you do is get open up a brand new trader dashboard. Okay, from the sidebar over here, brand new trader dashboard. You can have this in addition to your normal dashboard. Have just these three columns: account balance, and auto liquidate threshold value. Just those three. And after you're done trading for the day, literally all you do is right here, just make sure you clicked onto the screen, hit Control A, it'll highlight all of them. Okay, Control C, and that copies them. And then all you do when that's done is you'll just go to this box. Now, probably the first time you do this, you'll need to highlight all of it. So all three, PA number, balance, threshold, all three, and then you'll just Control V to paste it. And then going forward every day, all you need to do is just click this box and paste it there, Control V. And it'll copy all your account numbers, all your balances, and all your auto liquidate threshold values there. And that's literally all you do every day. That, and then you'll just go back to the month and put in, whether you won, lost, the total amount, screenshot, your notes, grade, and all that. And that's it. You're done. That's all you do. Now, if you're not going to copy paste, you will have to each day go in here and update your balance, your threshold value. Okay. The starting balance and the payout balance minimum, you just set that one time and that's it. But these two are the ones that you have to update every day. Okay. So I'm just going to go in here and put in random. That way we can just go ahead and fill this stuff out and get to showing you how it works. So let's say we have all 50K accounts. Our auto liquidate threshold starts at 47,500 because if you had Apex, you have $2,500 drawdown. So we're going to fill that all in. Okay. And our starting balance, of course, is 50 grand. And I'm going to fill that in. Now, payout balance minimum. This is the number you got to put in, the number that's required for you to qualify for a payout. Every prop firm is different, but like Apex, for example, on a 50K account, you got to make $2,600. So your account balance has to be at $52,600 in order to request a payout, to be eligible for a payout. So here, I'm going to go $2,600 because that's what I need. Okay. And you'll just do that for each account. So in this case, I'm just going to drag it down. And that's what we have there. Now we're set up. And every single day, like I said, you just adjust your balance and your PA threshold value. And that's it. Okay. Now we're going to slide over here. And these are your trading days. Now, again, depending on who you trade with, you may have to add extra days. You may have to adjust the days required, which you can. If you need to require, 10 days, you can adjust that. If it's 8 days, you can adjust it. Whatever your prop firm requires, okay? And like I said, just unlock the sheet, and you can go in here, right-click, and insert a new little range here and add days if you know how to mess with spreadsheets. I mean, ChatGPT will get you through a lot. So here you go. You can't mess with these account numbers because it's going to just copy what you put in over there. Here's where you enter your payout. So like, for example, if I took a payout of account 1 here, then I'll put 1. Because I took a payout, and then I'll put in the date that I took my payout. Okay, so I can track how many more trading days do I need till I get back to that another request period. Okay, so you'll do that. And then every time you're done trading as well, you will come back here and you'll just check I made a trading day. Okay, so in each day until you get to the trading days required. That's it. So for the purposes, and you'll see like on the overview sheet right here, trading days met. No. Let's go back here. Let's say I met all my trading days for this account. Come back. Yep. Trading days met, but I still need the profit. Okay. So this overview sheet's going to show you the overview. And then you'll do that each day. So for the purposes of this, well, I guess I don't need to put anything else in here right now. So that's all you're going to adjust right here. Everything else, all this stuff is just data, okay, that you don't need to mess with. It's all locked. This area here is if you have multiple years, which hopefully you do. Hopefully you carry this sheet on for multiple years. You'll add that in, carry it over to see because I want to see all my numbers forever. Okay, and then here, this is where you'll enter your carry over from previous years as well. I'll get to that in a minute. You don't need to worry about that. The rest, you don't need to you don't mess with. Okay, so that's literally all you do here on the data sheet. So let's go back to actually let's put in an amount of 53 grand now, so that way it looks like we met our requirement here. Okay, there we go. Let's go back to the overview sheet. Okay, so you can see profit met to withdrawal. Yes, on all the accounts. I have taken a payout out of this account. You see right here, we have 3 grand built up of equity in our accounts. Still have a drawdown of 5,500. Well, which that's not the case yet, because your drawdown would be 50,100 now. That's how Apex works. 50,100. There we go. But like I said, you'll always be adjusting this. So let's say that's how it looks now. I'll go back to my overview. Okay, I got 2,900 in drawdown, 3 grand, and it just carries over. Right here, I have 900 available because Apex also. So you'll have to adjust this if you're not using Apex, because Apex allows you to dip into your safety net. This would be the safety net. If they require you to make $2,600 to request a payout, a lot of prop firms will require you to make more than that. So if I wanted to take $500, I would have to make $500 on top of this. So if I'm using a prop firm that, let's say they're like, oh, once you reach 2,500, then you can make a payout of anything above that 2,500. Then what I would want to do for myself is figure out what that number is. So if it's that same example, and I want to make sure and withdraw $1,000 every time, then instead of putting 2,500, I would put 3,500. Okay, that way I know, okay, 3,500 or across 2,500, but once I hit 3,500, I could take $1,000 out. So that's what I want. So I'd put 3,500 there. And if I go back to my overview sheet, I would have to. Whoops, did I mess this up? Oh no, it's because I haven't put the equity there. So yeah, there's 0 available for payout, right? Because now it's calculating that 3,500. So let's go back to the data sheet. Let's pretend we're at 55,000. Okay. So, yep, I qualify. I have 2 grand available for payout, right? Because I have 5,000, and then I'm at 5,000, and I require 3,500. Now, like I said, the reason why you have to adjust this if you're not using Apex is because Apex allows you to dip into that safety net by $500. So a lot of companies are going to require you to make whatever you want to withdraw. You got to make it on top of that balance that they tell you. But Apex tells you, like, for example, here, 2,600, they allow you to dip into it by $500. So that's why if I have, let's make these numbers easy. If I'm at 52,600, instead of being able to withdraw nothing, like now I'm eligible to withdraw what I make on top of it, Apex allows you to dip into that by 500. So in that case, it's going to show 500 here. Now it's up to you if you want to take that out or not. I personally like to be at 1,000. But again, you're going to have to adjust that depending on whatever prop firm you're using. And all you do is just, like I said, unprotect the sheet. Then you'll just have to come in here and you'll have to mess with the formula. If you don't know how to mess with the formulas, I'm sorry. But really all you'll have to do is to remove that 500 that you're allowed to dip in is up here on this formula. Right here, you see this minus 500, minus 500. You're just going to have to remove that, okay? So that's how you do that. And I want to explain that because I don't want you to feel like trapped, like you have to do things a certain way with this spreadsheet or with the prop firm or whatever. Like I want you to be able to do whatever you want to do. Okay, so then just make sure after you're done, you do go back and protect the sheet. and just leave it as is, because you don't want to accidentally like mess things up. So yeah. And then all this up here on the top is your yearly amount that is calculating. So let's go ahead and let's just add in a couple more fake trades and stuff here and profits. Okay, so let's say we made 500, 150, 352, whatever. 400, now we got 300. Now let's say we lost 150 because we are great money management. We have a great plan. We don't lose that much. So as you can see, your average win-loss ratio, profit factor, win rate, all that good stuff. Okay. Then we go back to the overview. Now we have our equity curve populating. First month we made 1,050. This is cumulative, so it adds it up. 2,302. Then you can see up here your yearly gross P&L, 2,302. And the net, what that is anytime you have withdrawals, it's going to show you how much total you've made, but then it's going to show you your actual amount that you have in your accounts, your balances, because it takes that withdrawal out, okay? And it shows you your total yearly wins, losses, trades, all your yearly stats here, okay? And then down here as well. Now, that's all you do. You just go through each month and you trade, and then you have your overview. And that's really it. Now, the other thing, the lifetime, if you do go through an entire year, or let's say you're watching this and we're in November, December. So you start with 1 month. You'll want to only do that 1 month or 2 months, and then you'll want to start a new sheet. And what you'll do is you'll take these yearly amounts, okay, and you're going to go to the data sheet, okay? You're going to take your lifetime gross P&L, your net P&L, just from the old sheet, and you're just going to manually type them in here. So let's say last year we had a good year. We made 100 grand. And my net P&L was 60 because we took out 40,000. We had 100 winning trades. We had 25 losing trades, so a total of 125 trades, for example. So all you do is you enter those in here. And when you do that, and then you're going to have to put in here too. So from the previous spreadsheet, you're going to take the current year, and on the new spreadsheet, you're going to enter it in previous year 1 right here. So if I had a new spreadsheet going, I would take, and this was my old one, I would take this 241, put it in year 1 on the new one. This 100, put it in year 1 on the new one as well. And that way it'll continue to calculate your averages. Okay. And then once you go back to your overview, now you can see it's calculating what I made this year now with my lifetime, and I can see all my totals. So I thought that was pretty cool. So I put that in there. Okay. Now, the last thing I want to go over is this contract sizer that I was talking about. All right. So it auto-populates, as you can see here. It populated my accounts, my drawdown available, my risk per day, and all that good stuff. This comes down to how I like to do my money management plan. How I like to do my money management plan is, because I know my statistics on my win rate, how often I lose multiple days in a row, things like that, like my daily win rate. I know really of how much of a buffer I need to give myself, and I base it on how much drawdown I have. Okay, let me see, I'm gonna need my calculator. If I have a drawdown of $2,500, okay, and right here what you'll see is losing days until blown. What I like to do is I like to figure out, if I lost every single day in a row, how many days in a row would I have to lose to blow this account? I want to give myself a number, because if I gave myself a number of, say, for example here, 12 losing days in a row, I got to lose 12 days in a row to blow my account. Well, I know based on my data, my statistics, my history, I have never, ever lost 12 days in a row. Ever. And if that's the case, and I stick to my rules and my don't break my rules and stuff like that, then if I give myself 12 days of cushion in a row, that account should last a long time. And what do I mean by that? Okay, so if my balance is my drawdown available, if I have $2,500, like a brand new 50K account, $2,500 available to blow that account, where if I lose that, my account's gone. And let's say I divide that by 12, right? Because if I give myself 12 days in a row to lose to blow that account, that means I'm basically risking $208 per day. And if I lose 12 days in a row at $208, then I'll blow the account. Now, we know losing streaks can happen, right? You might lose 5 days. You might lose 3 days. You might lose 7 days. You got to kind of know that data for yourself. My data over 2 years, I've been trading for over 5 years, 5.5 years now. But for the style and strategy I trade now, it's been right at about close to 2 years now. With the data that I have for those 2 years, rarely do I even lose 3 days in a row. I'll lose 2 days in a row sometimes. Rarely do I lose 3 days in a row. And the most I've ever lost in a row was 5. Ever. And that happened once in 2 years. So with that being said, if I'm giving myself 12 days in a row, that's a pretty decent cushion. So that's why I labeled it moderate risk. If I give myself 20 days in a row, that's a low risk. I'm probably, if I blow that account, it's going to be like many, many months, right? Now I can be a high risk and I can give myself 8 days, 6 days if I wanted to. Now, maybe I don't blow that account, but it's a higher risk, right? So that's how I look at it. I give myself a certain amount of days before I blow that account. So what happens is I put in those days here. I put in my tick value. So if I'm trading MNQ, it's 50 cents tick. If I'm trading NQ, it's $5. So whatever your tick value is, whatever instrument you trade, you put that in there. And your stop size. And once you put in your stop size, so my stop size is never, like every day I trade, I don't have an exact stop. Some days it might be 20 points, some days it might be 30. But I always have an idea of what my max stop size is going to be for that given time period. Because there's times where the market isn't like very volatile, right? And most of my days are like, say, 30 points, 20 points, whatever. Then I can set a max amount. I can say, look, no matter what, I'm not going to, like, yeah, my stops are probably going to be around 30 points, 25, 30, 35. But no matter what, I don't want to be risking more than 40 points. If I set that number for myself, then I'm going to use that here. Okay, so 40 points times 4 a tick, right? 4 ticks a point. So that means 160 ticks is the max that I'm going to risk. So I know I'll put in here 160 ticks, okay? So what that's telling me is that with this drawdown available, with these parameters right here, just what I showed you, I shouldn't be risking more than about $208 a day. And with that, that means I shouldn't be risking more than, or using more than 2 micros because it's 50 cents a tick, right? So I shouldn't be using more than 2 micros. And what this copier ratio is that most of us copy our trades, right? We copy them across multiple accounts, blah, blah. And sometimes it's like, if you have different account sizes or whatever, it's like, I got to figure out the ratio and I got to always adjust it. Well, all you got to do here is adjust your leader. If your leader is a larger account or whatever, and your leader is trading, say, 2 contracts, then you put that in and it'll tell you the ratio to use if all these need to be 2, right? So it'll tell you the ratio depending on what your leader is. So I kind of like that feature because it helps less calculating. And as your account balance grows and your drawdown grows, this will also tell you when to size up. If you keep this 12 days and your balance grows, so like, for example, let's go back here and let's add in a really big trading day to get that balance up. Oh, oops. It's not here. Sorry. It's on the data sheet. So let's say this account balance is at 62,000. Let's go back to the contract sizer. Now we have 11,000 in drawdown. I can risk 12 micros now. You see that? See how that works? So that's cool. I can risk 12 micros on this account, and I can risk $991 a day. And it's still the same 12 days until I blow that account. So this takes the dollar away. And that's why also I've teached and preached many times not to look at your P&L, not to look at the dollar on your charts, all that stuff. That way, when you look, you add contracts, everything's the same. Okay. So now I can say, man, I can trade 12 contracts on this account, and it'll continuously adjust and tell you when to increase sizing. And it'll also tell you when to decrease sizing too. So you can set your own rules with that. I personally don't like to decrease once I've increased, unless that drawdown starts getting really, really low. Then you might have to take a step back and, decrease. But otherwise, I typically don't. See, like here, I'm at 5,900. I could risk 491, which means I can go up to 6 contracts, 6 micros or whatever. You can be doing minis if you want. It's up to you. Same thing here. All it is just the days until blown. How much cushion per day, and with these parameters. And then sometimes maybe the market's gotten a lot more volatile, and I can either reduce my sizing or increase my stop. If I increase my stop, I just tell it there. Now, if my stop is smaller, then I just do it here. Then, of course, you could trade more contracts if your stop is smaller. So this is completely up to you. However you want to adjust it, completely up to you. But that's the way I look at risk management. That's why I've had my same 20 Apex accounts for over a year now, like a year and 3 months, 4 months, and I've never blown them, and I've gotten plenty of payouts from them because of this right here. I increase and I don't decrease, even if I have a losing day. Once I increase my contracts, I keep it, because what happened to me too was, real quick, on those bad months, had a great month, had some bad months, I downsized. It took me 2 months to recover, really a month and a half, because I downsized, and now I had a really good month, but the dollars were smaller because I was smaller contract sizing, right? I'm not saying there's times that you don't need to decrease your contract sizing, because there absolutely is. But if you increased it and then you just had a losing day, there's no reason to decrease it again, because if you decrease it, then it's just going to take a couple more days to get it back. And then when you increase it again, that might be the day you have a loss. So you don't want to do that. Anyways, that's all as far as I'm going to get on that. But so yeah, that's it. That's how you use this thing. Play around with it, figure it out. It might take, a couple times going back to this video and, figuring it out and making your own adjustments. But hey, it's been great for me. I love it. It's helped me so much, and I really hope it helps you as well. Because like I said, the biggest thing to me is money management, discipline, psychology. Tracking this stuff helps so much, seeing it, and I really hope these new little features helps you too. So yep, that's it for me today. So go grab you these new spreadsheets, and please continue watching my videos. If they help you, I hope they help. I'm on X. Find me on X. I'm always on there commenting, posting. In my Discord, you can always chat with me there. All the links are in the description. So I definitely appreciate you being a part of the community. Hope this helps you. And as always, trade well, everybody. Take care.